if we look at something like a Netflix, for instance, right? So Netflix, and I told the private group this, right? And by the way, if you're looking to apply to join my private group, that'll be in the description area down there. I might also have it as a pinned comment if you're looking to fill out an application. So Netflix is pretty much a recession-proof business model. That's a great thing for them. Rates don't really matter for them. Recessions, no recession, doesn't really matter. Netflix is such a affordable product, $10-15 a month or whatever, that most people, it doesn't matter. They're going to continue to have Netflix. It brings, most people use Netflix sometimes several times a week, sometimes, every single day, right? And so it doesn't matter what happens in the economy. Netflix is going to be just fine, right? But Netflix has a few things going for it long term, right? And we'll speak about Tesla's long-term vectors in just a minute. So their advertising business are just getting that up and rolling, right? That's a baby newborn business, I call it, right? That has 10 plus years of scaling ahead, 10 plus years of scaling ahead for their advertising business. Don't be surprised if long term they make more money from the people that are signed up for the advertising tier for Netflix than they do for people that aren't signed up. And then what Netflix could do at that point in time is they could go ahead and they could essentially just keep raising the price of the non-ad supported tier in future years, and eventually it's $30, $40, $50, and then people will say, hell with this, I'm just going to sign up for the ad supported tier. So that's a beautiful thing that I think Netflix is doing here that I don't think a lot of people are kind of thinking about over the next 3, 5, 7 years, right? No, their forward P is rather conservative for Netflix. I mean, Netflix is traditionally traded either no forward P or, something with a 50, 100, 150, something like that in front of it. So that's the other good part. Subscribers are coming in much stronger than anticipated, right? Now, there's some risk with Netflix, certainly around the Hollywood strikes and what's going on there. Now, do keep in mind, Hollywood's not the only place they film, especially for Netflix. They use international locations. Obviously, Atlanta's built out. There's a lot of chatter I'm hearing that they're going to build a potential massive Las Vegas Hollywood here in Vegas, not too far from my house, from what I'm hearing. I don't know. We'll see about that. So I think longer term, I think there's less worries about that, but short term, absolutely, that could be something that hurts Netflix if they can't produce content because this strike goes on for a much longer period of time, or if there's a scenario where costs are just immensely higher. Also, everyone has tried to get in streaming the past couple of years, so it's very competitive, and a lot of these old dogs are trying to replicate Netflix. It's much harder said than done. They can't do it, basically, but they're trying to do it, right? And so it is something to kind of keep in mind with Netflix. So, if we're talking about the next 6 years, right, Tesla's a better buy in my opinion, right? I think and this is once again, if you have no position built, right? Let's say you have no money in either stock. I think Tesla's the better buy for the long term. I think you got to be ready to go through a lot of roller coaster ride, especially over this next 12 to 18 months. But nonetheless, folks, I think Tesla's a better buy long term. If we're just speaking about the next year, what stock do I think will perform better? I think Netflix. I think if the market goes down substantially, I think Netflix will go down way less than Tesla. I think if the market goes up very nicely over the next year or two, or we'll just say 1 year, right? I think Netflix is going to go up more than Tesla because I think Tesla is going to still have that issue about rates that's basically going on there, right? So yeah, that's what I say. I think Netflix is better short term. I think Tesla's better long term. Now, for me personally, I'm much more interested in buying Netflix stock right now, not because of short term or anything like that. It's just like at the end of the day, I'm already heavily invested in Tesla. And I just started buying some Netflix shares here. I bought Netflix for the first time ever last year when it was like under $200 a share. It was like $100 something, and I made some really good money out of that. Sold, took my profits, and I kind of regretted it. I was like, why did I need to do that? Like Netflix at the end of the day is just a really great company that has a bright future. Like, just buy and hold that baby, kind of like I do Tesla. And so right now I just bought some shares, and I hope it goes down more short term. I'm just not very convinced it's going to go down in any substantial way. Let's call it past next week essentially. So we'll see what happens there, but that's kind of my personal opinion. So first off here, let's go ahead and take a peek at the public account. Okay, so I don't know if you guys have seen this account. This account I started in the private stock group. I started this about, how many years ago was that? Either 5 or 6 years ago in the private stock group. And I started this portfolio to show everybody, exactly how I build a portfolio and how I manage positions and managing risk in the market and all those sorts of things and how I build out a portfolio over time, right? And so we've been at it for years now at this point in time. Like I said, it's either 5 or 6 years in. We now have it up to a $1.7 million portfolio. My long-term goal is to get it to a $10 million plus portfolio. It's not happening tomorrow, but that is my long-term goal, to get to 10 million plus in this particular portfolio. So it's just a climb. It's going to take, many more years to get there, but I do believe eventually one day we will get this portfolio to $10 million. Now, I want to go through each of these and talk about them valuation-wise and things like that, show you revenue growth estimates for these companies, net income growth estimates. But first, I think it needs to be said. I think this is very important. I say this, okay? This portfolio is really dictated upon two stocks. Let's call it the way it is, okay? Meta and Tesla have gone up so much. They've become such big positions that the portfolio is dictated by those two stocks. And so guess what happened the last 2 days? Tesla and Meta stock got wrecked, right? Tesla stock especially yesterday, right? Meta stock fell 4% yesterday. It fell another 2.3% today. If those two stocks do horrible, the whole portfolio is pulling down. It doesn't really matter what happens in the rest of the portfolio because it's just not enough to offset what's going on with these two stocks specifically, right? Now, if Meta is a $1,000 stock in the future and Tesla's a $1,000 stock in the future, this portfolio will run. That's how we get to, let's say, $5 million plus, right? Just based upon those two stocks. Never mind what happens with the rest of the portfolio over time. So that is something to kind of keep in mind. Now, also, if you notice in the public count, I am a strict growth value dividend investor. So I'm going to have certain stocks that are growth stocks I'm going to own. I'm going to have certain stocks that are more dividend stocks, right? And certain stocks that are more value stocks. And sometimes there's a stock that's even like multiple categories. For instance, a good example is PayPal. PayPal is a growth stock trading at a value stock valuation. So PayPal fits the category of like growth and value. Meta, if you look at Meta's forward P, which we'll look at all these different stocks in just a moment, this is really, even after the big move it's had, this is really a growth stock trading at a value pricing, right? And so this is where you get into some real intriguing territory. You look at something like a Cake, that's a value play, but it's also a dividend play, right? So sometimes you have some different crossovers here, right? Now, by the way, they need to like combine my Avant shares here. I don't know why they separated them, Fidelity, but so let's go through these. Okay, starting out with Meta, right? Let's start out right at the top with big old Meta. So, Meta. If we go ahead and we go to earnings here, okay, and we go to earnings estimates. By the way, I'm just using Seeking Alpha for this. And if you ever want to use Seeking Alpha, by the way, it's a good platform. People write articles and stuff on. Check out my description area. I think I still have the link down there from when I did a sponsorship with them like a month or two ago. It's for a free 14-day trial if you're interested. You can actually access it and look into all different stocks and whatnot. But, if we look at Meta, we're trading at based upon analyst estimates for 2024, which I think analyst estimates are probably low. It's my personal opinion. Trading at about 21 forward P. Now we need to say, okay, well, what type of revenue growth are we getting, okay, for a company that's trading at 2024 numbers, right? Well, analysts expect the company to grow revenues at double-digit rate, right, 11%. So this is a factor that I say this is actually still a very undervalued stock, believe it or not. Even after this epic move up, this is still an extremely undervalued position, which is shocking. Because when you think about where Meta's come from, right? Q4 2022 was $88. We're 9 months, 10 months later now. And the stock's, now it's $295, but it was pushing $300. You would think, man, after that move, it has to be severely overvalued. Stocks don't work like that. That's the way people wish it worked, so they'd be real simple in their brains. So it'd be like, oh, this stock went up a lot, it's overvalued. This stock's down a lot, it's undervalued. Doesn't mean that at all, okay? So the truth is, should I be selling stock or buying stock of Meta? Let's say you forced me. You said, Jeremy, you either have to sell $50,000 worth of Meta stock tomorrow or next time the market's open, or you have to buy $50,000 of Meta stock. What I would personally do is I would actually buy $50,000 worth of Meta stock. It is still a steal deal. Now, you won't see me buying more Meta stock because at the end of the day, the weighting is so huge already for me, right? What if I'm wrong about Meta? What if it's not there? What if the numbers don't happen? All sorts of things. There's always a risk of whatever you think is going to happen doesn't happen, right? And so Meta is actually still a steal deal. A lot of people think when they see a stock like Meta, they think, It's not, I missed it. That's what they think. They say, you know what, I missed it. I missed it with Meta. Sucks, man. I wish I would have been buying back when Jeremy was buying. Remember the day I bought $77,000 worth and the stock was trading at 88.94 or whatever it was, right? And a lot of people are like, I missed it, damn it. Man, I wish I was with those guys buying back then. You think you're missing it, but you haven't missed it. You missed the first major move, but you haven't missed the second move, the third move, the fourth move, or the fifth move yet. And so that's just a factor I think that's very important that people remember, right? Is they a lot of times think they missed it and they never missed it, man. So any opportunity, any dip you get in Meta for the next 6 months is a buy the dip opportunity, bottom line.